Hey everyone, welcome back to CryptoCache. Thanks again for joining me here. Hope you're having a great day. Happy 4th of July for you. This will probably be one of my only uploads here today. Just seems sensible to go and update Bitcoin really quick so you can kind of know what's going on. Truth is, Asian markets started the dump last night. It's simply continued just based on today being a holiday, a lot less buying pressure due to the fact that traditional markets are closed and a lot of traders are not trading today. So I think that will shift and change. We might actually see a rally back up to 60K. It's hard to say, very speculative at this moment. But what we want to recognize here is two things did not happen. First of all, we did not get that bounce off that 0.618 fib level. We were looking for a short at 6215. That never happened. Price continued lower. We got a good short in ourselves here at, what is it? We got QNT, good 37% in 20 hours. We were able to get one short in there. Unfortunately, I wanted to get more, but the price continued to run. And I don't know if you know me by now, but I don't like to catch falling knives or try to, take a trade that's running away from you. Okay, so it just doesn't make a ton of sense. Either way you look at it, at this point here, we can see this $58,500 mark as a strong, likely resistance level. Was supposed to work as a support. It only held for about 4 hours. Okay, so that 1.414 fib level, let's go ahead and remove this here and draw out some new charts. This is going to be likely the new level here. There we go, 0.236. It makes perfect sense. Okay, so again, even though we're expecting the price to pull back at this point, I think it happened a lot faster than we did expect. Majority of liquidation has been swept, but keep in mind, I think there's still some left down at the $56,000 mark. So let's go ahead and refresh our charts here and kind of see. And just be mindful that we could very well see a lower price point. I don't think the bottom is in by any stretch now that we've broken that threshold of 60,000. My anticipation is 56,000 should hold some support if the price doesn't end up coming back that low, or more so maybe when that happens. We just want to be mindful of that. Anyways, here's kind of where we're at. We got some longs here. Let's go ahead and zoom in a little bit. Longs, a lot of longs here at, and these are late longs by the way, more recent, probably mid to low leverage longs at about 55,500. So they probably bought the dip at about 57,000 and essentially are in profit right now. But either way you look at it, we can see some liquidation down there, somewhere in the range of 1 to 2 billion in the last 7 days. Those are this just happened really realistically in the last 12 to 24 hours. Furthermore, if we take a look at the last 1 month's worth of trading, we can see here, this is where the concentration is at. It's about $8.6 billion now. It was previously 10. So that implies that there have been some shorts that either got stopped out or closed their positions. But truth is, this number is coming down a little bit, but it's still very present, okay? So having said that, that's been a number we've been expecting for a while to get swept. And now that we're close, it's probably best to anticipate that will be the next target, okay? So just keep that in mind. Now, when that's gonna happen it's hard to say. Would it make sense for it to happen today? Quite possible, because again, there's a lot less buying pressure today. It doesn't make a ton of sense for the price to be able to hold its price point. I think we're just going to continue to see the prices pull back. But again, we've got to stabilize somewhere. We take a look at overextension, we're going to notice that we are pretty well overextended. So let's talk about this here on the daily. First of all, we got 3 black crows forming. While this first one isn't a massive candle, it's only about a 2% candle. You could kind of extract that. Basically looking at the charts here, we've got 3 days of bearish continuation. Generally, when you see 3 strong red days or green days, it's followed by a 4th doji candle and or green day. So we may see a green day tomorrow. My expectation is we might see a slight relief rally to 60K, and if so, 60 to 61.5 might be an advantageous area to consider shorting if we can get back up to that level. Between now and then, this is kind of where we're at, right? So again, this is that previous support range. We're going to go ahead and change the color here, of course. That is now a resistance range for us. And let's go ahead and quickly discuss the weekly, because I know some folks were talking about this. And I would agree. What I'm talking about here is losing 50 on the RSI. Generally speaking, if we close at this level or lower, we'd be back under 50 on the RSI, and we haven't been there since, September of last year. Okay, and if you remember, roughly, September of last year, we were in the 30 to 40,000 range, and it was generally not a favorable situation. There was a lot of indecision there, and not great, right? So having said that, that level of where we're at right now, this isn't super bad. I think that with us having a second stochastic swing here coming up on the horizon, that's going to warrant a good little push up. So my anticipation here is that the price action is correcting itself naturally. Coming down is actually very advantageous because we're more likely to see a very strong recovery here soon. Do I think we're going to break through 60,000 the first time we try to break it? No. I do personally think we'll have a little bit of resistance there. But what I'm getting at here is generally the stronger the price pulls back like we're seeing now, the more likely it is to recover quicker as well. Okay, now that we are kind of getting close to this, I wouldn't say uncharted territory, but we don't have a lot of volume in this range. I mean, let's take a look at the volume profile here. This is the daily time frame. look at how much of a gap we have in volume. There's very little between 52 and 60,000. We're really in uncharted territory here. We spent 2 days at this range before. So it would make sense for the price action to become fairly well range bound between 50 to 60,000 is a very rough estimate for now until that, until we build that volume base. Okay. Again, volume is important to recognize. Either way, look at it. Let's go ahead and take a look at the daily and kind of work our way down. Let's stick to the standard stuff here and recognize that we are closer to 30 on the RSI. Okay. Now, last time we came down as low as 30, we actually came down lower than 30 on the RSI. We bounced off 58,500 to rally back up to roughly 64K. All right. Now, if we're seeing the scenario here, we're bouncing off 30 again, or hypothetically we get a bounce, that would put us upwards of 61.5 or possibly 62,000 for the next little relief rally. Last relief rally lasted about 7 days before it pulled back. Okay, so again, statistically speaking, we are due for a correction to the upside. However, stochastic RSI is swinging down and MACD is fully diverging. We've got an MACD-FU here as well, right? So exactly why you wait for that convergence to officially occur before you take a trade. So all these things kind of combine together leads me to believe we will see further downside, but I do also feel as if we're going to see somewhat of a recovery here in the relative near future, just based on how aggressive the sell-off was, okay? Again, 56,000 is still definitely on the table, and I think it's very likely that we're going to see that. It's just a matter of when, okay? So do you just short your shirt off right now? I would say generally yes, but also no too. So again, it just depends on where you're at there, because it's really one of those things here where you can kind of see the price action. It's performing very well. So let's take a quick look here at MACD here. We can see MACD is pulling back. We can also see stochastic RSI trying to converge, and money flow index is low and RSI right there at 30. These are all unfavorable signs, but they're also very standard signs that we are due for a correction. Okay, and again, when you overextend yourself below 30 on the RSI, and then the money flow index is as low as it was, is definitely one of those things where it's going to probably bounce here in the relative near future. Okay, so that's kind of where we're at there on the 4-hour time frame. Again, keep in mind, just because we're experiencing or potentially going to experience a bounce does not mean it's going to hold very long. We're still well below all moving averages, and there's no reason to consider that we're in good shape. Speaking of which, let's go back to the daily time frame and just touch on the moving averages. We're now officially below the 200-day SMA as of right now. So unless we close at 58,500 or higher today, we're going to be kind of in a bearish type of situation. And we've already broken our descending trend over the last couple of weeks. Ever since that happened, we've had to adjust our strategy, as a matter of fact. So if you're watching this video and you're part of my community, you'll know that we've adjusted our strategy. I'm working out some really awesome statistics to kind of identify the areas of opportunity. And the truth is, we're going to probably start using less targets and just make sure we kind of get in and get out of the market, right? Because it's not the market to kind of swing trade in anymore. So you got to swing trade carefully. Either way, I'm getting at that point. I'm touching on that because being at the 200-day SMA or lower, that's shifting the momentum to a potentially bearish scenario, okay? So again, you don't want to attach yourself to the fact that we are truly bearish, but I do think it's best to, kind of understand generally that we are moving down, right? Having said all that, let's quickly look at the hourly and wrap it up here. We can take a look at this. Simply put, there's no other way around it. We are absolutely in bad shape as far as the Ichimoku cloud is concerned, okay? So we're definitely in a situation where if you have a short position open, continue to hold it open. While we missed our short at 64,000, it came up to what, 63,890, and then we secondarily missed our short at 61.5. We still got a QNT short, right? For example, I'm mentioning that too as well because it's important to recognize that you're going to miss a lot of opportunities. Best traders miss them all the time. While I'm not the best trader ever, I'm pretty consistent, and a lot of times, minus the strategies that need to be adjusted at certain times, we need to recognize that it's important to calibrate, okay? So having said all that, just because we miss opportunities doesn't mean we won't catch any more in the future. But for right now, when the price action breaks down and moves this fast, and it's a holiday and there's a lot of selling pressure, we have a big market dump, lots of billions of dollars in liquidation, it's usually best to wait a good 24 to 48 hours. I'm going to give you one analogy and we can call it a day here. My analogy is, this is one I've used for quite a while, and a lot of people kind of laugh at it, but imagine yourself, tripping down like 2 or 3 stairs, right? You fall down a small set of stairs, you're probably going to bang your knees up, you might jam your finger, you got a little, you're going to have some stitches perhaps too if you fall in the dirt, right? Having said that, if you were to do that, you can walk away from that, right? That's what normal corrections in the market are like. The correction we just saw here in the last 24 hours is a different scenario altogether. It's a complete wipe of altcoin longs, everything got destroyed. And it's as if you fell down a flight of stairs. You're not going to recover well from that quickly, right? You're going to probably be in a cast. You're going to have a wheelchair, perhaps. Those are all things you want to kind of think about here when the market moves like it did. So do you want to just jump right back into the market when you are not conditioned for it? No, let the market find its bottom or find its direction and then get in, right? So again, just peace of mind here right now. Don't trade for another 24 to 48 hours. It's probably best to avoid trading so you can not, you can avoid those pitfalls, right? Because Bitcoin literally just fell down a flight of stairs and it doesn't know what the hell it's doing. So that's kind of where we're at right now. Make sure you wait. I think that's probably the best way to go. Easy way to understand it here, though, is 58,500 is the tentative resistance level for us. Secondary to that, 60,000 and 61.5. That every $1,500 mark, we have these resistance levels. As far as supports, I would say there's not a ton of support at this point. There's nothing really to hold the price action in place. Minus that liquidation at 56K, I think once that's swept, we'll see the price recover. All right, that's all we got here, folks. Thanks again so much for watching. I hope you learned something today. Hope you have a great rest of the day. We'll see you all in the next one. Take care of yourself.